Obviously, Apple, a very critical stock for the entirety of the asset management industry. Some of the stock's largest holders include Vanguard, BlackRock, State Street, and Fidelity, which owned more than $130 billion worth of Apple shares at the end of the third quarter. If that stock opens down more than 8% today, that amounts to losses of about $10 billion for those four firms alone. These firms also manage passive instruments like index funds and ETFs included in that amount, which may also slip because Apple makes up such a large weighting in the S&P NASDAQ Dow. Warren Buffett's Berkshire Hathaway owned about $40 billion worth of Apple shares, a position that's actually shrunk from about $57 billion over the summer as the stock price declined. But if the stock opens lower by 8% today, Berkshire Hathaway is looking at losses of $3 billion in one day alone. At the end of the third quarter, Goldman Sachs said that Apple appeared as a top 10 holding in 27 hedge funds. Among the largest holders include Millennium Management, Co2, Tiger Global, Citadel, and Point72. These positions are as of the end of September, based on most recent disclosures, and may have likely changed since then. It's also worth noting Apple's timing here. Releasing these numbers on the first trading day of the year means that funds that book their performance at the end of the year won't be including these losses, assuming that Apple's share price declines today.
That's interesting. I hadn't thought about that. You think there was
timing?
Yeah.
I don't know if it was purposeful or anything, but I know that funds are probably pretty relieved that they have a lot longer to recover losses
from it.
Although you wonder if they wanted to make sure, end of a fiscal quarter, holiday sales are in and all the rest of it. But I mean, maybe that's a side benefit.
Yeah.
Exactly.
For years, Apple was sort of cast, and it was probably somewhat true, as an under-owned stock, right? In other words, active managers didn't have tremendous bets in Apple, and you see the index funds are some of the biggest holders. I mean, maybe that holds up.
Well, and what happened was hedge funds were avoiding Apple. They were avoiding a lot of the FANG names for a long time, and they were getting punished as a result because it made up such a large proportion of the index. They weren't able to really generate alpha without it. That all changed in the fourth quarter of this year when Apple's share price declined and a lot of hedge funds actually exited.